I want to take you back to a moment in Zimbabwe's financial history when innovation knocked on the door loudly and the system responded by slamming that same door shut. This is the story of Golix, Zimbabwe's first and Africa's pioneer crypto exchange. A company that could have become a billion-dollar giant, a symbol of what happens when innovation meets regulation that isn't ready. A masterclass in a failed balancing act. This is not just a crypto. This is not just a story about crypto. It's a story about missed opportunities, fear, and the cost of shutting down the future before it even gets a chance to breathe. To understand Golix, we first need to understand when it appeared. Uh, Picture Zimbabwe in the early 2010s. Hyper Hyperinflation still fresh in everyone's memory. The same dollar switching on and off like a faulty generator. Banks struggling with cash shortages. Diaspora remittances are flowing in, but through very expensive channels. And ordinary Zimbabweans, desperate for a financial system that they could trust. And then Bitcoin enters the global stage. And around 2016 to 2017, Bitcoin wasn't just an online curiosity anymore. It was becoming a legitimate global asset. And in Zimbabwe, it arrived not as a speculative toy, but as a lifeline. People used Bitcoin to pay suppliers abroad. They used Bitcoin to send money across borders. Some used Bitcoin to preserve their savings. Others used it to bypass failing banking infrastructure. But at that time, the crypto economy here was like the Wild West. People traded Bitcoin peer to peer. WhatsApp groups were filled with strangers that were promising deals. There were no pricing benchmarks. There were no formal platforms. It was just meet me in town with your cash, and you'll see. Um, it was chaotic and risky back then. And then came Golix. It was founded first as Bit Finance. Golix then evolved into a proper cryptocurrency exchange, one of the earliest in this continent of in Africa. It had a simple interface, clear order books, deposit and withdrawal rails, KYC, real customer support, basically everything you would expect from a modern exchange. And for the first time, Zimbabwe had a proper marketplace for Bitcoin. Um, Transparent prices, safer transactions, and a platform that opened Zimbabweans to the global economy. Golix didn't just save crypto enthusiasts. Businesses used it. Diaspora families they used it also. Uh, traders used it, and uh, millions of them were now finally curious about digital assets and this stuff. And because Zimbabweans were so desperate for stability, the demand for the service that Golix was providing skyrocketed. At one point, Bitcoin in Zimbabwe traded at almost twice the global price because people were willing to pay anything to escape the broken traditional system in Zimbabwe. Golix was growing fast. They were hiring, uh, they were expanding to other African markets, and they were becoming a case study for how emerging markets like Zimbabwe adopt crypto faster than the developed world. And then that's when the trouble began. Uh, around May 2018, the Reserve Bank of Zimbabwe, the RBZ, they published the infamous cautionary statement that changed everything. Uh, Now, um, every central bank, like the RB said, has two jobs, right? They have to manage risk and encourage innovation within the public financial system. It's a balancing act. Uh, Regulate, but they have to regulate without suffocating progress. They have to protect the system, but they have to prepare it for the future. But in 2018, well, when the Arabs looked at Golix, they didn't see innovation. They saw risk. They saw capital flight. They saw something they didn't fully understand. And instead of saying, let's regulate, let's regulate this, they said, nah, shut it down. And just like that, they issued a circular instructing banks to stop dealing with cryptocurrency exchanges. Not just cryptocurrency exchanges like Golix. Anyone involved in crypto, they said banks should stop dealing with anyone involved in crypto. So accounts were closed, operations were closed, funds were frozen and stuck, growth halted overnight. It was the financial version of pulling the rug. Now, let's pause and ask the big question: Was crypto risky? Of course. Uh, every new technology carries risk. The internet did, mobile money did, even the Zig, the Zimbabwe gold. It carries risks, massive risk. But shutting something down is not the same as regulating it. And let me compare with what other African countries were doing at that same time, starting with our neighbor South Africa. South Africa moved towards a regulatory sandbox. And in Kenya explored blockchain use cases. Nigeria also initially cracked down, but they still allowed peer-to-peer growth for crypto and blockchain. Mauritius built a regulatory framework to attract blockchain companies. And meanwhile, Zimbabwe, desperate for innovation, the government decided to extinguish the spark. And that spark at that moment was Golix. Now, imagine what Golix could have become had Arabis had chosen a different path. What did Golix have? Golix had early mover advantage. It had a booming market. It had regional expansion plans. It had community trust. It also had a team that understood blockchain long before the world took it seriously. They were on the path to becoming a pan African crypto giant, the kind of company that could be valued in the billions, not millions, in the billions. It's the kind of company that could employ thousands, if not tens of thousands of people. The kind of company that could inspire other Zimbabwean startups to see that it was possible. Think of the companies uh, today that started around the same time as Golix. I'm talking about Binance, Luno, Yellow Card, BitPesa, which is now trading at AZA Finance. Many of these are now worth billions and are operating across dozens of countries. Golix was early. Golix was positioned. Uh, Golix was solving real African problems, but their home country didn't support them. Now, someone might argue, uh, but the RBZ was preventing money laundering. But crypto is dangerous. But Zimbabwe's financial system is fragile. Uh, yes, those concerns are real, but they are not the reason to shut innovation out. There are reasons to build guardrails, actually. And let's put this in perspective. When EcoCash launched, did the regulators understand mobile money back then? No, but they allowed it. They monitored it. They regulated it. And today, mobile money is essential to our economy. Uh, when internet banking started, did regulators understand online fraud? No, but they didn't shut down the internet. And with Golix, the problem wasn't crypto. The problem wasn't Golix. The problem was the failure of the balancing act by the regulator. Uh, think about what the RBZ could have done instead. Uh, they could have created a licensing framework allowing exchanges to operate legally under strict rules. At least uh, they could have implemented transaction limits to manage risk, but at the same time allow usage. Um, they could have required audits and reports to make sure platforms operate responsibly. They might even have created a regulatory sandbox so that they can observe, they can learn, and guide the technology. Uh, they could have at least engaged industry experts and work with innovators, not against them. And this is exactly what other countries did. In these countries, they now host thriving crypto ecosystems. Zimbabwe had a chance to lead. Instead, it was pushed to the sidelines. And what was the cost? Golix froze. Its investors ran away. Their expansion stopped there and then. Development stopped. Customers they lost access. Talent scattered. Even other crypto developers outside of Golix they stopped looking at crypto. This company that could have been Zimbabwe's first crypto unicorn, the one that might have built Africa's first coin base, was effectively paralyzed. And this is the tragedy. Golix wasn't just a business, it was a symbol of what Zimbabwe could be when we embrace innovation, and a symbol of what we lose when fear wins. The shut Even though the shutdown was effective, but it didn't stop crypto in Zimbabwe. People still trade. The markets for crypto still exist, but it's now underground. It's now informal, and it's now unregulated. Exactly the kind of environment regulators should want to avoid. This is why I call it a failure of the balancing act. Innovation was sacrificed in the name of control. Regulation was used as a weapon, uh, not as a guide. And Zimbabwe lost a potential $1 billion company because of this. Uh, and as I close this episode, here's the big takeaway: innovation doesn't wait. And I talked about this in one of the other episodes. It doesn't pause because a regulator isn't ready. It doesn't freeze because the system is scared. Innovation moves, innovation grows, and when one country shuts the door, another country opens that door. The story of Golix is not just a depressing chapter in our financial history. It's a warning. The story of Golix is a mirror. It's a reminder that the future belongs to the bold, not to the fearful. Now, and here's the iron. Here's the iron. Today, Zimbabwe is exploring central bank digital currencies. They now want to regulate this stuff, but it's already too late for Golix. They've already closed shop. Um, Governments around the world are adopting blockchain. Corporate giants like BlackRock are investing in Bitcoin, and digital assets are becoming mainstream financial tools. Golix was simply ahead of its time. It wasn't the problem, Golix was the solution. The rule was not the company, it was the opportunity that Zimbabwe missed of creating a unicorn. But yes, the good news: the future hasn't disappeared, blockchain innovation is still possible. Bitcoin is still here and it's doing well. Digital assets are still transforming the world, and Zimbabwe can still catch up if we choose to embrace tomorrow instead of uh, instead of fearing it. So let the story of Golix be a lesson, not a funeral. And I'm not trying to point the finger at someone. Let the story of Golix be a lesson in courage. Let the story be in foresight and in the need to regulate smartly, not aggressively, because the future of money is digital, the future of finance is decentralized, and the future of innovation is it's unstoppable. The future of innovation is unstoppable. Thank you. My name is Munyaraz Togarepi. This has been the Tomorrow Money Show. I'm reminding you once again that tomorrow's opportunities belong to those who prepare today. Um, See you in the next episode. Until then, stay informed, stay empowered, and remember the future of money is already here. Thank you.